Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 31st of March 2024, and a happy Easter to all of our listeners. And we're publishing our Gold and Silver Weekly Update for the week ending the 29th of March. As we predicted last week, gold and silver have continued their upward trajectory. But how much further do they have to go? Well, we'd better take a look. Now first, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. Placed a link in the description box and comment section below for those who've not as yet joined that channel. Gold rose $67 last week, rising from $2,166 to $2,233, having hit a high of $22.38 and a low of $21.64, a rise of 3%. In our last update, we predicted that gold would trade between $21 and $22.50, which it did, and interestingly closed the week very near to its high. Gold's spread between high and low was $64. In sterling terms, it was up £50 at £1,770 an ounce, and in euros it closed up 66 euros at 2,071. Silver rose 28 cents, moving from $24.70 to $24.98, having hit a high of $25.23 and a low of $24.35, a rise of 1%. Last weekend we forecast silver would move between $23.75 and $25.75, which it did, quite comfortably. And like gold, silver ended the week relatively, not quite as close, but relatively close to its high. The difference between silver's high and low was 88 cents, which really, in view of the information coming out last week, was a little disappointing. We did expect a few more fireworks. In sterling terms, it's up 19 pence at £19.81 an ounce, and in euros it's up 0.30 euros, that's just under a third of a euro, at 23.18 euros. The gold to silver ratio on the way back up from 87.7 to 1 to 89.4 to 1. I'm still waiting for the pumpers gold to silver ratio of 13 to 1. You don't hear that quite so often these days. Bitcoin is up $5,000 on the week at $70,290. Equities were broadly higher, save the Nasdaq. The Dow Jones up 332 points at 39,807. The S&P 500 up 20 points at 5,254. However, the Nasdaq closed down 49 points at 16,379, but it did rise quite considerably the previous week. And the good old FTSE index for those in the UK up 22 points at 7,952, and that 8,000 figure is looking quite possible. Oils continue their ascent, which is playing havoc with the inflation rate. Brent crude up $1.57 at $87, and WTI crude up $2.54 at $83.17. The dollar index is up very marginally, in fact almost unchanged, 0.05 points at 104.48. Now last weekend we said watch out for the consumer confidence figures due on Tuesday, and more important, the PCE inflation figures due on Friday. Well, consumer confidence for March was almost equal to that for Feb, though markets were expecting a higher figure by 2 points than the 104.7 it actually received. Consumer sentiment figures announced on Thursday were, however, 3 points higher than expected. But as we said last week, it's the PCE figures which will be the game changer, and they did not disappoint in so much that gold and silver reacted quite considerably to them. Though we do suspect traders might have slightly over-egged the readings, unless their expectations were low. You see, the market was expecting the Fed PCE figure to read 0.4%, marginally up from 0.3%. That was what we had in January, resulting in the year-over-year figure to blip up from 2.4 to 2.5. Well, it achieved the 0.4%, and the blip up to 2.5. However, it did not expect a revision of the January figures upwards by 0.1%. Now, the core PCE figure, which is what the Fed focuses on more, was expected to fall to 0.3% from 0.4%, resulting in the year-over-year figure to remain constant at 2.8%. Again, this was achieved, save that the January core PCE figures were uplifted by 0.1% to 0.5%. Again, a little surprising to the market. That said, what was interesting was that normally we would have expected the market to find this news slightly negative, only marginally more than positive, in that it shows that inflation is not quite coming down at the rate markets were expecting. But Fed Chair Jerome Powell said there were no surprises in the data, and inflation risks are not elevated. Even though, if you actually look underneath the surface, the figures do suggest that the annualized rate of inflation in the past 3 months rose 3.5%. That compared with the figures of 2.8 in January and 1.6 in December. Hardly a sign of an improving situation. Now, the Fed seems calm about this, but next month's figures should reveal whether this adverse trend is continuing or that it is perhaps a normal move for this time of year. As we've repeated ad nauseum, if you have oil prices into the 80s, we're not going to see inflation reach that 2% target. And we're looking at mid to late $80 oil, even when the US dollar is strong. That does not bode too well in our view. Now, this coming week, we have manufacturing PMIs on Monday, factory orders on Tuesday, look out ADP employment report and services PMIs on Wednesday, numerous Fed officials speaking on Thursday, and the important non-farm payrolls on Friday for March. Now, the Feb non-farm payroll suggested 275,000 new jobs, with now 200,000 expected this month. We shall see how these fare and whether any revisions are adopted. Normally in March, we tend to see gold edge down a little, but this March, we've seen a significant rise, and gold's best month since November 2022. There is no doubt in our view that the combination of strong safe haven demand, expectation of US interest rate cuts, and substantial central bank buying have fueled this surge. Ongoing global geopolitical tensions and trade uncertainties are driving investors towards gold as well. Interestingly, China's central bank has risen to the top as being the top gold purchaser, with Poland being the second largest net consumer, followed by Singapore. We continue to expect higher prices this year, especially as lower interest rates become a reality. And with some of the most significant general elections due this year for many a decade in both the US and UK, we can see even higher purchases of gold occurring. Now, silver has trailed gold over the last 3 months, though it has also gained in price. Silver does have some catching up to do, which invariably it does when one least expects it. Some analysts are predicting a double of its current price by year end. We're not quite so certain of that, but we certainly do envisage higher prices than we currently have. So, gold is up 10% or $202 for the month, and silver's up 11% or $2.60. If the economic figures continue to suggest lower rates in June, and we suspect the Fed is aiming for that, then both will move higher in the coming weeks. The difficulty, though, is for this next few days, as some consolidation is required to achieve the next leg up. That said, if the data is positive, there will be no breather ahead. So what's our forecast for this coming week? Well, we envisage gold to trade between $2,200 and $2,300, with $21.75 and $23.25 as outliers. Silver, we predict, will trade between $24.25 and $26.25, with $23.75 to $26.75 as outliers. Maybe silver could catch up this coming week. What do you think? Do share your thoughts. Thank you so much for listening. We'd appreciate it if you would give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter and subscribe there. Once again, we hope you have a wonderful Easter and a prosperous week ahead.